All right, let's jump right into the Professional Investor's Playbook. We're going to break down 4 really powerful strategies that the pros use. And trust me, this first one might completely change how you look at the market. It's a pretty wild thought, right? But this is a powerful idea called inversion. It basically means that figuring out what to avoid is way more important than trying to find the next big winner. Before you even think about what to buy, you've got to have a rock-solid system for what to throw out. And that right there brings us to maybe the most powerful secret in this entire playbook. It's not about chasing hot tips or getting lucky. Nope, it's about systematically getting all the potential disasters off the table first. It's all about playing defense. So, how do we play defense? Well, we use something called forensic analysis. Think of yourself as a detective, okay? A company's financial reports, that's your crime scene. You're hunting for clues, for those little red flags that tell you, hey, something's not quite right here, long before it all blows up. This is how you protect your money. You know, this quote just nails a core truth about investing. A company can show off huge sales. That's vanity. They can even report some nice-looking profits. That's sanity. But if they aren't actually bringing in cold, hard cash, that's the reality, and it could be a big problem. Cash flow is the real lifeblood of a business. To do this like a pro, you need a checklist. Here are 3 of their absolute go-to checks. First, you follow the cash. Simple as that. Look at how well their profits are turning into actual cash. Second, you dig into their spending, especially on big projects. And third, you even question the auditor by looking at what they're getting paid versus the company's growth. And here's that follow the cash idea in black and white. Look at this. 2 companies, both reporting the exact same 100 crore profit. Looks good, right? But wait, the healthy company generated 110 crores in cash from its operations. The risky one, only 20 crores. That huge difference in cash conversion, that's the red flag you're looking for. So that's our first big strategy, playing defense with forensic analysis. By clearing the field of all those hidden landmines first, we can now confidently switch over to offense. And this next strategy is all about seeing where the smartest people in the room are putting their money. Seriously, just think about it for a second. Who really knows what's going on? Is it some talking head on TV, a random account on social media? Or is it, the people actually running the company day to day and the giant institutions with armies of analysts? In pretty much any company, you've got these 4 groups of owners. What we call the smart money is usually the promoters, so the founders, the insiders, and the big institutional investors. These are the folks who have the deepest insights and are playing the long game. And the difference in approach is just night and day. Retail investors, a lot of the time, are reacting to news, to headlines, to emotion. The smart money? They operate on deep research and a disciplined, unemotional process. That's exactly why tracking when they are consistently buying more of a company can be such a powerful signal. And that's strategy number 2, follow the smart money. Now for our third pro strategy, this one is for those times when you see a massive, undeniable trend coming, but you have absolutely no idea how to pick the one company that's going to win. It's a brilliant concept called proxy investing. I mean, let's take a trend that you cannot escape right now, the artificial intelligence revolution. It's obvious this is going to change pretty much everything, and there are going to be some huge winners. But here's the trillion-dollar question, right? Who's it going to be? One of the big tech giants, a brand new startup, some super specialized software company? Trying to pick this single winner in a field that's this crowded and moving this fast, it's incredibly difficult. It's a huge risk. So, let's invert the problem again. Instead of trying to bet on one specific gold miner who might strike it rich, why not just invest in the company that's selling the shovels to all the miners? That's the beautiful, simple idea behind proxy investing. For this AI gold rush, the shovel sellers are the companies building the essential infrastructure, the chip makers, the data centers, the power companies. These guys win no matter which specific AI model becomes king. They are all proxies for the growth of the entire trend, but with way less risk. And that's how you use proxy investing to play a trend.
Okay, this brings us to our final and honestly, maybe the most fascinating strategy, finding deep, hidden value where the market has just completely misunderstood a company's worth.
This is called an inverse special situation. It sounds a little complex, I know, but the idea is actually incredibly simple. You find a good, profitable company that is trading for less than the cash it has sitting in the bank. Let's make this real with a case study. So here we have Metan Alloys, a company that makes stuff for the steel industry. At the time of this analysis, you could buy the whole company on the stock market for about 3,200 crores. Now, here's where your jaw hits the floor. The cash and investments on their balance sheet totaled 3,400 crores. Just let that sink in for a second. The cash they had was worth more than the entire company. And this is it's incredible. If you bought the whole company for 3,200 crores, you would immediately get 3,400 crores in cash. That means the market was saying their actual profitable business was worth negative 200 crores. You were essentially getting paid to take a profitable business off their hands. And that is the incredible power of uncovering hidden value. So we've now walked through 4 totally distinct strategies from the pros. Let's put it all together into one single framework. And here it is, the whole playbook in 4 steps. You start by playing defense, using that forensic analysis to dodge the bullets. Then you follow the smart money to see where the real experts are going. You use proxy investing to ride big trends safely. And finally, you hunt for those unbelievable hidden value deals. So what's the one thing that ties all of this together? It's this core principle of margin of safety. Every single one of these strategies is really just a different way to manage risk and to stack the odds firmly in your favor. We've covered a ton of ground, from cash conversion to smart money to these hidden value plays. But remember, the journey always starts with that first defensive step. So now that you have the playbook, which one of those forensic red flags are you going to start looking for first?